Are you waiting for those interest rates to come down to 3% again before you buy a home? Well, if so, I hate to be the one to tell you, but you may never buy a home in the foreseeable future. Why? Because the short-lived era of 3% interest rates for a 30-year fixed mortgage is over and unlikely to return anytime soon, perhaps for decades. Now, this is according to Lawrence Young, who is the chief economist at National Association of Realtors. Young states, quote, "One could never truly predict the future, but I don't see mortgage rates returning back to the 3% range in the remainder of my lifetime." So let's talk about why they won't return, and then I'll share where the rates are going. Now, in order to understand why they won't return, it's helpful to understand, well, for me at least, to understand the circumstances involved that created those low rates. The pandemic happened. The average 30-year fixed mortgage rates of 3% or less were an anomaly related to the pandemic, lasting from about July 2020 to November of 2022. Now, the pandemic created a feeling of economic uncertainty, not seen since the 2008 financial crisis. And the Federal Reserve, fearing another prolonged recession, followed the exact same playbook it used in 2008, which is to pump money into the economy to stimulate growth. Now, as was the case in 2008, the Fed slashed the interest rates to nearly 0%, created emergency lending programs, and bought government bonds and mortgage-backed securities. And since the mortgage rates are closely linked to the Fed's benchmark interest rate, the interest on the mortgages then hit the rock bottom at 2.67% in January of 2021. However, unlike 2008, the economy quickly recovered and rising inflation soon became the problem. By the spring of 2021, the year-over-year inflation rate had accelerated beyond the Fed's benchmark of 2%, forcing the central bank to start raising the interest rates again. And with that, the mortgage rates rose too. Now, the ongoing pandemic did slow the speed of those rising rates just a bit, but with the COVID-19 crisis diminishing in 2022, things began to change. They kept rising. Quote, "Mortgage rates staged the fastest and largest run-up in 28 years as inflation soared to a 40-year high and the Federal Reserve was in the process of rapidly pivoting to a policy of tighter money and higher interest rates," says Greg McBride, chief financial analyst for Bankrate. So will the 3% interest rate ever return? It doesn't seem likely. Young says the mortgage rates during the pandemic were, quote, "an exceptional measure during exceptionally uncertain times," end of quote. And almost every economist has predicted that the 3% mortgage rate will probably never return. So, where are the mortgage rates headed? Well, the current average mortgage rate for a 30-year fixed rate mortgage is 6.81% as of July 6, 2023. It's slightly lower than its November 2022 peak of 7.08%, according to Freddie Mac. However, there are many that are expecting a steady decline over the next year or so. Check this out. The National Association of Realtors forecasts an average rate of 6% by the end of 2023 and a 5.6% the end of 2024. Now, Fannie Mae forecasts an average rate of 6% by the end of 2023 and a 5.4% for 2024. And my personal favorite, Mortgage Bankers Association forecasts an average rate of 5.8% by the end of 2023 and a 4.9% for 2024. I'm going to hope for that last scenario. If you'd like to find out how buyers are saving thousands of dollars of buying a home in today's high interest rate environment, check out this next video, in which I interview a mortgage lender expert who explains mortgage options maybe nobody has ever told you about.